Hello guys, welcome to my channel. This is RichyTrades. So today I want to be looking at Gbpusd, and I just want to make an overview of the chart so we can align ourselves for trading come tomorrow and in the following days. So currently this is Gbpusd weekly time frame, and if we shrink into our chart we can see that Gbpusd has been bearish over the last few months, and we have actually been in a bullish retracement back to our supply zone, and from the look of things we've already arrived at supply zone. We already arrive at higher time frame supply zone. So this was our last break of structure to the downside. This was our last break of structure to the downside before we started having this bullish pullback. This higher high, higher low, higher high, higher low, and a higher high. And if we look closely, we are going to realize that we have a little trend line right here, or trend line liquidity right here. Yeah, we have some trend line liquidity right there. Let me put that very well. Okay, let it be like that. And we have, let me see, yeah, this high swept this other high, so that makes this POI a very good POI. So we have an order block seated right there. Currently price did not tap into that order block, but price somehow raided this trend line liquidity just a little, not the entire liquidity. So there is this potential for price to keep going higher until it taps into this order block. There is also the probability that price can break through this place and switching our entire market dynamics into a bullish one. So but for now, this is all we have on the weekly time frame. No much information other than our previous week was bullish, though we couldn't close above the previous day's candle, but it was a great bullish candle. So you can see this was a very great bullish candle that can drive the market upward in the coming week. So no much information from here. Let's go down to our 4-hour time frame where I normally do my analysis, so we can take a closer look to see if there could be any opportunity, or we can also understand where the market is headed so that we can align ourselves correctly for the coming days. So here we are on Gbpusd 4-hour time frame. So let's take a good look at what happened. Now we had a break of structure right here. We had a major break of structure right here. Let me put it that way. We have a major break of structure right there to the upside. We call it a major break of structure. Yeah. So after we had this break of structure, look at the low that gave us this break of structure, because price was actually on a bearish pullback. So the pullback ended here, and then price reversed back into bullish and kept buying until this high was eventually broken. And after price broke this high, we had a series of pullback again, making way for our discount levels. And then I think, let me go to the daily time frame so that this can be clearer. go to the daily time frame. All right, so here we are on the daily time frame. This is the break of structure we had, and then price, we know after a break of structure there will always be a pullback. Price has to pull back into discount so that buyers can have opportunities to get involved in the market and buy back to the premium area. So one of the things we look out for after a break of structure is for price to retrace back into discount level before we can consider buying into the market again. So how do we know whether price has gotten to our or how do we even know where is our discount level? For us to know our discount level, we pick a tool over here known as the Fibonacci tool, the Fibonacci retracement tool. So you place it in the low and drag it up to the main high that broken, and then 50% of the level is this 0.5. This is 50% of the fib 2. So you can just decide to mark that level. These are 50%. So basically below 50% of this fib level is considered your discount, and above 50% is your premium. So normally when you're looking for a buy in the market, you want to buy in the discount, and when you're looking for a sell, you want to sell from the premium. Now since we are considering buys for this market for now, this is our discount level and price has just come into our discount level. So let me take out the fib 2. Price has just come into our discount level and reacted very well. Price took lots of liquidity. All of these internal pullbacks were liquidities. You can see that price took to the last internal pullback. Price swept out to the last internal pullback, taking all the liquidity that were in this zone and then reacting from this demand, because the whole of this place is a demand. This is a demand level. So the price reacted and broke back structure to the upside. This was, let me take that out. So after price reacted from this demand zone in our discount, it went back up and broke structure here. This was a confirmation that we are going to trend bullish. This was a bullish confirmation. We can call that a 4-hour internal change of character, because this is going to be a 4-hour break of structure. So this one is an internal structure that has just broken, which we considered an internal change of character. So the moment price breaks this place, we can now start coming to this discount level again to start waiting for price so we can buy. So this would have been, this is a very good key level that we would have considered buying from. So price eventually came down here and swept our POI again. Price broke our POI. Price broke our POI, but price did not close below it. Price break the POI, but price did not close below it. So we can then, let's first of all go to a 4-hour time frame to see if there was any reason for us to get involved in the trade. So now this is price in the POI in a 4-hour time frame. As you can see, there was no confirmation from the 4-hour time frame. Price kept on coming down into a POI. Price kept on coming down until it eventually took out the POI. So there was no confirmation. Price, even though price gave us this bullish engulfing candle, I personally, I don't trade like this. So I would not have taken this trade with this bullish engulfing candle, because I don't trade from the 4-hour either. I just watch the 4-hour and watch how things are going before going down to my 15 minutes to look if I can get an entry. So but not to be aggressive, for us to be conservative, we need to allow our 4-hour time frame to switch back bullish for us to be sure that yes, price is ready to buy. We don't just jump in when we see big bearish candlestick falling into our POI like this, we don't just jump in. We need to allow price to give us the confirmation that it wants to go bullish again. So what would have been our confirmation? This is our 4-hour time frame. This is a high right here. But I've gotten the confirmation right here that we are bullish. We have a break of structure right here. After this break of structure, where would we be looking for to take this trade from? Now we will be looking at this POI right here. We'll be looking at this other block right here. We'll be looking at this other block right here, and in fact, let's say we'll be looking at everything right here, because this is the whole of these zones are together. The whole of these zones are together. So we'll be taking a look at the whole of this low. Let me take out this other big one. So after we got this change of character to the upside, this is our change of character. No, let me make that should be okay. Yeah, 4-hour eye chop, still okay. So after we've gotten this change of character and we've identified our POI for us to take the trade from, the next thing will now be for us to go down to our 15 minutes time frame and wait for price to come down into this POI that we've marked out. That is being conservative. We have to go back to the 15 minutes time frame, because it is on the 15 minutes time frame that I take my trade. So I'll have to go down there to wait for price to give me a very good reaction at this point before I take the trade. So let's go down to the 15 minutes time frame together. Go down to our POI. All right, so here we are on the 15 minutes time frame. Now after we've gotten this change of character to the upside, we've gotten our internal change of character to the upside, we waited for price to come back into POI. Here it is. We've had so basically this trade would have been a lost one for me. Would have just taken an L here. It's one of the things that happens here. It's really no big deal. It's one of those things that happen when you trade. These are POI. I like using the very first POI I see. This is my key level. So I love taking this type of POI since I want to take the trade directly from my 15 minutes time frame. So this would have been an L. This would have been an L. This would have been an L. Let me see, what time did price even come down here? Oh, this was around 9 8. This was around past 7 at night. So, well, to be honest, I would not have taken this trade. Why? Because I don't trade. I have my times while I trade. I trade some specific times of the day. I don't trade once it is 5 p.m. no matter the kind of signal I'm seeing. I don't trade. So honestly speaking, I would not have taken this trade. But if this had appeared during my key window, during the time that I like taking my trades, then this would have been an L for me. I would have taken the trade and I would have gotten stopped out. So that is the honest truth of the whole thing. I would have taken it if it was in my key level, if it was during my key window, my key trading window. I would have taken the trade and I would have lost it. But given the time this signal appeared, I would not have taken the trade. So that was it. Price ran our 4-hour key level. So that now takes us back to the 4-hour, because our 4-hour key level has been broken. We need to get more confirmation from the 4-hour before we can decide to come down to the 15 minutes again. So here we are on the 4-hour. We had price came down, run our low for the next time. So we'll now be looking at this high to get out before we can consider taking the trade again. We're looking at this high. So the moment this high gets broken, that is when we can now start expecting price to pull back into discount again so that we can trade. So when this high gets broken, this is now going to be a confirmed choke. It's not going to be a confirmed choke because the previous choke was invalidated. So this is now going to be a confirmed choke. So we'll now be waiting for price to pull back into discounts for us to get a very conservative and good trade to take. But meanwhile, while you're also waiting for that to happen, you realize that price has broken structure and has closed above here. So we are bullish. So even though we need price to come back down into discount for us to take the trade, we can still switch to the 15 minutes time frame to see the dynamics of the trade to see the dynamics of the chart at that particular time frame, so that we can see if there is a current trend on a 15 minutes time frame that we can join to maximize profits, or if we still really need to wait for price to come back into discount before we get involved in the trade. The dynamics of the 15 minutes time frame is going to make that clear for us. So at this point that we have broken structure, we go back to our 15 minutes time frame. So let's do that. So here we are on the 15 minutes time frame. We just broke structure right here. We just broke structure right there to the upside. So what are we to do? Even though we are waiting for price to pull back into discount on the 4-hour time frame, we can observe the behavior of price here to see how we can get involved to maximize profit during the 15 minutes trend. So we had a break of structure to the upside. We had price retest this place, and then we had a pushback to the upside again. Now we can now start marking our 15 minute structure. After a break of structure, what we look at for is for price to come back, take out an inducement, and then mitigate the POI and give us another break of structure. But for this particular push up, we did not have an inducement. Price did not take out any inducements. And in case you don't know what an inducement is, I will make a separate video explaining what an inducement is on the chart. But for this particular pullback, price didn't take any inducement, but it did fill this fair value gap and mitigates what looks like an order block right there, though it's not a valid order block, but price did mitigated it and pushed back to the upside, giving us another break of structure. So after that, we still didn't get an inducement. So basically there was just no entry. There was no conservative entry on all of this movement. All of this movement that price was making around this period. But price did pull back into discount. Okay, yeah, we got something here. We got a liquidity level here that price took out. Price took out a liquidity level right here. Price took out a liquidity level right here, and it did mitigate this place. What do we have here? This is a POI, but this POI is called you can call it I call it the key level. I personally call it the key level because I don't have time for all those plenty names people give it to it. Some people call it a breaker block. I choose to call it the key level. Yeah. So there would have been a good trade here. Now after price mitigates this place, another thing you want to be sure of, you want to check if this place that this key level is in your discount. Very, very important. You want to check if it is in your discount before you even take any trade. So let's measure it and see. Alright, so this key level is at our 0.618 region, below our 0.5, so it is in the discount region. So this would have been a good trade to take. So the moment price taps into our key level, what are we looking for? We are looking for our confirmation. And what is our confirmation? Price breaking an internal high. So we have price tap into this place, come back, sweep the low, and close above this high. So this could have been our confirmation, and then would have taken the trade from this candle wick. This candle sweeps the entire. You can just decide to take it around this area. Just take it around this area, cover the low, put your long position to right here on the low, and then you target your high. But personally, I like targeting 1:2 for my first profit level, and then I can now go for 1:5 or the high depending on the extent. So this would have been a TP hit right there, would have hit a TP right there, and then price at the same time gave us a new break of structure. Price gave us a new break of structure on the 15 minutes time frame. So after that, we see price come back down, pull back again like we would expect for a pullback to occur after a break of structure. But then this particular pullback, observe something here. This particular pullback came down and took out this level. Came down, took out this level, making it look as if we are going back bearish. But do you know we are actually not going back bearish? Yes, we are not going back bearish. Why did I say we are not going back bearish? Now this is because if you notice, before price came down to sweep this low, and okay, if you go to the 1 hour time frame, you're going to realize that this thing that price just did here is just a sweep of this low. Price just swept this low. Price did not close up. Price did not close below it. And if you should take a look at the left hand side here, you realize that this place has this big candle. You see something happened there. This could have been either a news event or where momentum actually came in from the market, leaving this large fair value gap that has not been properly filled. So price can decide to come back down, fill this, sweep this internal, this low that we have here, and then try to fill this candle here try to fill this fair value gap with just one candle, and then quickly reverse back to the upside. So let's just confirm this thing I just said with a higher time frame Let's see if price actually closed below there. Like I said, you can see price did not close below this place. Price only swept this low just to take more liquidity before continuing to buy. And then another thing that will help you determine if price is actually switching bearish is let me show you some other thing that can also help you determine if price is switching bearish or not. So back on the 15 minutes chart, now this is something else to take a look at. Where are we? Where exactly are we? This is where we are. So now, this is what you should notice. You should notice that before price came to sweep this low, internally started switching bearish. You could see that after we took out this low, we have this internal higher low. Internal lower high. We have this breakout structure that came all the way to this place. We have another internal high lower high here, and then price sent these candles down to sweep this low. After this particular sweep, we see price came back up and broke this high again, realigning with the overall bullish bias that we are having. This is signifying to us that price is still bullish, that this break of structure down here, this break of this low, was just price hunting for more liquidity to fuel the next buying move. So even though we didn't really get a good opportunity to get involved in this trade, but it's confirmed to us that we are not bearish, we are still bullish, because when price broke this point right here, anywhere around this place would have been a good place to get involved in a trade. Anywhere from this key level that we are seeing here to anywhere around here, any pullback would have been a good level for us to buy. But then price didn't give us the opportunity to get involved again for that move, and then it came back up and gave us another break of structure. another break of structure. Same on the 15 minutes. And then after that break of structure, we had price reversed and pull back down. Remember, after this break of structure, this is our major low. This here is our major low. Every other thing we are seeing here are all internal structure. As long as price has not made a 50% retracement to this low, any other thing we are seeing here are all internal structure. If you get an entry to trade to the upside, you shouldn't be surprised when price decides to take out any of this low in order to come back to the discount part of this particular leg. At the same time, or in the same way, we are not going to be surprised when price will take out any of these 15 minutes low. These are current 15 minutes low in order to make a 50% retracement back to our 4-hour low that we were expecting price to come back to. We will not be surprised when that is going to happen. We have that at the back of our mind that sooner or later that is going to happen. But in the meantime, we are focusing on this 15-minute structure. So we have our low here and a high here. So let's look at where our discount zone is going to be. This is our current low. So now from this place, from here is our 15 is our discount. When price makes a retracement from this high towards or beyond this particular place here, we are already in our discount level, so we can start looking for our POI where we can get involved for the buy again. I know some people might be saying, why that this price has already broken this place, why didn't we get involved when price came to this level, that this place is a discount zone? But this level would not have been the discount if we should reposition our FIP2. For instance, okay, let's just do it and confirm it. Look at now, putting our FIP zone here in the previous high. Can we see that price did not come down to our 50% level? So that would have made buying from this particular low very risky, or just say a bad trade. So we wouldn't have bought from this place because this place is not a valid low for us to buy from. So we'll just wait for price to get to the highest point it wants to get to. Then we put our FIP2 to see where price is going to retrace all the way down to in our discount. So after we've done that, the next thing for us to select our POI from our discount zone. Now, where are our POI? We have our POI right there. We have one POI right there. The whole of this is a POI. This is a POI. All of this level is a POI. So this level is a POI, and luckily for us, that is where price came to react from. So when price gets into our POI, like I always say, you just need to see an internal shift in the momentum of the market for you to get involved in the trade. So price has come into our POI right here. We had a sweep of this low. Price shifted, change character right here. Then we can then get involved on the retest of this place. Although this was not my trading window, so there is no way I could have traded by this time of the day. Could have waited maybe till morning, then I would then have joined the continuation around this place. So this would have been it. And then the moment the market momentum is like this, our first target is always going to be this high, because this was the lower high that led to a lower low internally. So we want to target this place first to see if price will be able to, continue pushing back up, or if this is going to be the point where we reverse and go for our 4-hour discount level. So after taking my 1:2, and we then aim for this high, or maybe somewhere around this place close to the high. I can decide to aim for the high. It depends on what I want or what I can afford to risk. So we would have hit TP there, and hitting TP and breaking this place confirms to us that we still want to go higher. So after that we can reposition, maybe look for another entry to continue higher until we take out our 15 minutes original high. So this is an inducement right here. We have an inducement right here. Oh no, that is not a good inducement. That is not a good inducement. That is not a good inducement. Notice we are trying to figure out where we can get involved in again in order to target our overall high. So let's see if we can see a key level. Alright, we have this key level right here. So there is every good reason to get involved around this one, because there is a key level right here. There's the key level right here. So we can decide to get involved around this place again. And the reason why we are getting involved here, even though it might look risky to you, is because we have already confirmed, price has already shown us that the bulls are clearly in control of this market, because we've reacted from a very good PO high and we've gotten a massive break of structure with a good momentum candle. And this place, if we should take our flip to, we'll see that this place is a discount. That place is a discount. We're in the discount level. You can see we're in the discount level right there. And then if you should go by the internal little swing, you see that this was the last internal lower low, because we have this high, we have this low, we have this high again. It took inducement here, gave us this low, and then before it broke out again. So this was our last original low that we can decide to take a trade from if we want to. And then from this place now, we can then decide to target our break of structure points, which is right here. So but I've also make some good profit at this point. So I think this video is long enough. Let me just go on and let's just look at what let's just see what we can look at for in the coming week. And the video has been long enough, and then it's not looking as if we are diverting into something else. So let me just go ahead and look at what we can expect for the coming week. Okay, so remember, after we had a break of structure right here, this high became our last original low. This low rather became our last original low. Our last original low is going to be a change of character point. So this low became our last original low, and as you can see, after this last break of structure, price retraced. Coming back down, it refused to react and buy again. Instead, it came down and broke our low completely. It broke our 15 minutes low completely. This break is now telling us that, oh, it is time for price to come back to our 4-hour discount. So you can just go back to the 4-hour and see if price actually came back to the 4-hour discount. Did price do that? How are we going to know? We take our flip 2, we measure it from low to high. What do we see? Yes, price did came back to our 4-hour discount, and as a matter of fact, it reacted on a key level. Price came down to our 4-hour discount, and as a matter of fact, it reacted on a key level. So let's mark that out. This is a key level. So as a matter of fact, price reacted on a key level. So since price has come down to our key level right now, we can then go back to our 15 minutes time frame to see if there has been any realignment. If there has been any realignment, so we can, get involved for the buy again. So let's go to the 15 minutes time frame and see if there is a realignment. So there we have it. Price has tapped on our 4-hour key level, and then we've had this shift. Now notice this was our low, this was the high, this one, this was a lower low, and now we are having a shift. So this is our shift. This is our shift. You can call it a change of character, 15 minutes change of character again. So this is signaling that we are back bullish. Where is now our POI going to be? We have our POI right here. If you want to go aggressive, you can just take your trade from here. If you want to go aggressive, you can take your trade from here. Put in your long position to stop loss on the low, and then you target your first 1:2 like I would do, and then 1:5. 1:5, especially in trades like this, 1:5. So that would have been it. But that's for an aggressive entry. If you want to be conservative, then you would wait for price to come back down here. Wait for price to come back down here and give you another internal confirmation, which would have been somewhere here the following day. This is my trading window. The moment this high was taken out, when this high was taken out right here, I would have looked for an entry. Maybe take this last candle. So I've been my entry. This will be my entry for a more conservative entry. So I've been my entry. 1:2 first, target 1:5, and maybe wherever I feel like taking my profit again, do that. So after that time, we've been having series of higher high and higher low. So we have this low makes this high, makes this low, make this high, make this low, make this high, make this low, and made this high before we had this this pullback into discount. And if you take our FIB2 out and place it here from low to high, we'll realize that price actually made a retracement down to the discount level again, and also reacted from a key level. This is our key level. We mark that is the key level. We take the whole of this zone because the candle extends down to the low. So here we are on the key level, and then price has mitigated our key level properly and gave us a confirmation to get involved for the buy, because we are bullish, and our expectation right now is for us is for price to buy all the way. Come on, it's for price to buy all the way up here and take out this high. That was our expectation. We are expecting price to come back and take out this high because we have been bullish all along. We have been bullish all along, so we are expecting price to come and take out this high, even though we know very well that we are in this to be a, let me just indicate that as a major boss here. Even though we know very well that we are in the discount level of the monthly time frame, but since price has not realigned, price has not given us that confirmation yet for us to go sell, so we continue with the current trend of the market. So right now, as we can see, we had this last 15 minutes break of structure. That 15-minute break of structure, and this is a change of character points for the 15 minutes. It's a change of character point for the 15 minutes time frame. So let's see how we could have gotten involved in the trade first before we talk about other things. So price has mitigated our 15 minutes time frame. We didn't get any confirmation in this move up. Price came back down, and price actually consolidated a little at this point until at this point price came here, swept this high. That's price taking liquidity, and after that price gave us an internal shift of structure right here. This was an internal high. Price gave us an internal shift right here. That was our confirmation to get involved in the trade, and our entry would have been this candle wick. This candle wick would have been our confirmation, because that is where a fair value gap rests. So we would have taken our trade from this place, put our stop, taking our trade here, put our stop loss at the low, and then target 1:3, 1:2, 1:5, and maybe the high, the overall high here. So our first TP would have been 1:2 right here. Would have taken profits, and then 1:5. Our 1:5 profit would have also hit, and then if we had targeted this high, maybe we would not have hit, we would not have gotten to that high yet. So this is where we are in the market right now. Our current target is this high, for price to come over here and give us a break of structure. We are waiting for price to come over here and give us a break of structure. So price is only just consolidating. Price is consolidating, probably seeking for more liquidity. Price is seeking for more liquidity before the buy move will resume. So this is where we are right now. So whenever you get a confirmation for your buy, you might decide to go long again, because I personally think price is still going to continue buying up the way, all the way up to our 15 minutes break of structure point, and maybe possibly buy all the way up to our 4-hour break of structure. But before then, all the internal consolidation are welcome. There are things we see in the chart every day. They are not new to us, and if you've been in the trading business for a while, you would understand that all of these consolidations are normal stops for price to, these are normal price behavior. They can happen, and you would also understand that there are times that you've seen that all your analysis is clear, this is what price is supposed to do, and then price ends up doing the opposite thing. You don't know it all. We could make mistakes. That is why it is not advisable for you to go into trading with any money that you're not willing to lose. So that is going to be all for today, guys. If you have stayed and watched up to this point, I want to say thank you very much for staying up to this point, and please do well to hit the like button, subscribe to this channel, share the video if you found the video helpful, share it so that other people can also consume this amazing content. And look, I want you to look forward to more videos like this dropping on this channel, and please, I'm really going to need your help to grow this channel. As you can see, it's a new channel, and I want to see how I can be sharing my trade analysis, trade overview, and other important trading contents with you guys. So thank you very much for watching today. I'll see you in the next one.